any of those years ending in 2 and 3, they typically are bottoms in the market. So years ending in 2 are bad years for the stock market, typically. It's impossible. It's completely impossible for it to be one of those.
Hi, this is Alessio. Hope you're well. In this video, I want to share with you a very fascinating conversation I had with macro analyst Jason Pizzino. And we talked about the major stock markets, and the reason why we did that is because what happens to the major stock markets also has an important impact on other markets, for example, Bitcoin and crypto. So Jason shared with us his outlook and predictions for the major markets and also the real estate market. And we're going to go through some of the important charts that Jason actually talked about and what they potentially mean for the foreseeable future. Now, before we begin to talk about the markets, there's an important question I'd like to ask you. Which of these is a dumb investment? Option A, put all your money into just one asset. For example, everything in the stock market, or Bitcoin, or gold, or whatever you like. Option B, spread your investments over a basket of stocks, bonds, Bitcoin, and gold. My guess is that most of you said that option A, putting everything, all your money into just one asset, for example, everything into stocks or Bitcoin, is a terrible or dumb idea. After all, if that market crashes, then you may end up losing all your money. So in that case, option B has to be the smarter investment, right? After all, what could be better than to diversify appropriately among different asset classes, like stocks, bonds, Bitcoin, and gold? But what if I told you that both options, A and B, are likely dumb? What? I hear you thinking? How can both be dumb? You see, even though option B, diversifying, seems reasonable, it is missing one crucial ingredient: fine art. Let me explain. Last year, in 2022, nearly every major asset class went down, with the exception of fine art. For example, last year, stock markets dropped by nearly 20%. The bond market crashed. Bitcoin and gold also dropped last year. But art prices went up. In fact, art had a record-breaking auction year in 2022, with the market currently surpassing even its pre-pandemic levels. Blue-chip contemporary art has now outpaced the S&P 500 for the last 27 years by an impressive 136%. But how is this possible? You see, art prices have a very low correlation to other major assets, which means they're less susceptible to huge volatility. Now, I do not make recommendations to anyone as to what to invest in. This video is only for educational purposes. My point simply is that it seems having fine art in our portfolio is key to being well diversified, which is correct investing. As I said about option B, it seems diversifying is incomplete without fine art. It is missing a key ingredient. So this is where Masterworks, our sponsor for this video, comes in. Masterworks has sold over $45 million worth of art, including their recent exit. The net proceeds are paid to everyday investors who did not need millions or an art degree. Masterworks even made headlines recently for a $36 million offering of a Basquiat piece on their platform. Masterworks now has over 790,000 users and $800 million assets under management. With numbers like that, it's no surprise that investments into paintings like Banksy, Basquiat, and Picasso have sold out in minutes. Getting started with Masterworks is really easy. It takes only a few clicks. You go to the website, create an account, browse their artwork, and then you can learn how to diversify your portfolio with one of the most strong and stable assets in the world. But you can get special access by using the link in the description. Remember that any money we get from sponsors is given to charity. Alright guys, thank you very much indeed. Let's get back to the video now with Jason Pizzino and our discussion about the major markets and his prediction for the markets in the next several months and also the real estate market as well. Okay, let's get back to it. Jason, thank you very much again for joining me in this video. I'm really looking forward to it, talking about the stock markets. I mean, I've maintained a bullish view on the stock markets since the beginning of the year. What are your views overall on the stock markets before we look at your charts?
I would say I was a little bit more shaken with the October 2022 low, so that September-October period, because I saw the low come in June of 2022. And I was just looking at that as being what I'm calling like a transitional period, a period where the market is transitioning from a bear to a bull. And when I saw that low come in, I thought, all right, if this thing doesn't bounce back quick, we're going to see lower prices. But fortunately, we had October 13th, hit that low, market came back. This year has been, I've remained bullish the entire time.
But okay, let's go on to your charts.
All right, let's have a look at the first chart. And I think that's probably a good segue. So this is just going right back into December. We see this low in December. It was a higher low from that October bottom. And then we got another higher low in March. And then prior to that, this was the June low that I was looking at. And then I saw September and October come in just slightly lower. But fortunately, it bounced back nice and quick. Now, I guess I bring that up looking at this overall picture. What got me extremely bullish was how cyclical this exact movement has happened exactly 20 years ago and exactly 60 years ago as well. So maybe you've seen this, maybe you haven't. It's really interesting that the market has bottomed. I had the numbers there. It was about 50% of the time for these bear market bottoms, it bottoms in October. Did you know that?
Yes, absolutely. Yeah. I think it's called the Halloween effect. That's an excellent point, Jason. Something I mentioned before in my video is called the Halloween effect, when usually between the period of October to December, there's a very bullish period. I mentioned this also last year as well. I warned, look, I think it was my video in September, October. I said, look, the period between October to December could be bullish, we could see higher prices. So be very careful about that potential and that bounce. And that explains also what you mentioned, which is why often you see these bottoms in the October period. So absolutely right.
Yeah, of course. You know, it's nice to see those things play out time and time again, and it just gives you more confidence the longer you're in the market. So I'm sure you've had that same feeling where you're like, man, I've seen this so many times, yet everyone else is bearish. Is it going to happen again and again? And so that's what happened here. We had in 2022, so just think here that 2022 and 2023, this is the bottom here. So we had a June low, an October low, a December low, and then a higher low here in March, which was extremely significant. We were looking at those exact lows in those months: June, October, December, March. March, very significant low. 2022, 2023. Now we go all the way back, and this happened across the Dow Jones as well. The Dow Jones, you and I both know there's over 120 years of data there, so it's better to use that. But nonetheless, the S&P, they moved pretty well, pretty much the same. So 2002, we have a July low. So we had a June, there's a July. Then we had an October low, almost to the exact day. And then we had a March low as well. If we look back in December, we also had a low in December, but we had a lower low in March. Again, almost to the exact day, exactly 20 years ago. Now, I focus a lot on the 20-year because these cycles, the 20-year and the 60-year, are key cycle years that Gann used. And you know, we briefly talked about Gann in a previous video, but those years are the really important ones to watch moving forward. So it happened exactly the same after the market crashed for 2 years. The July period here, October, you have a December low, and then you had a higher low in March. We had October and a March low, and then the market took off from that point. It took off all the way into 2004. And it looks like we're doing the exact same thing again. The market has basically taken off, and maybe we'll get a slight pullback, but then you can just see the market continue to go into 2004. Now, a quick look. I know we want to get through some of these details. 1962 was, I think it was exactly the same again. We have a June low, we have an October low, and then we get into 1963. Here is your February, March low. So the June low, then the October was the high low in this case. And then we had another very significant low in March. That was that higher low there. So it's just wild how these things continue to happen time and time again. You could almost pick up any of those years ending in 2 and 3. They typically are bottoms in the market, ending in 2 and 3. So years ending in 2 are bad years for the stock market, typically.
I've heard this too. Yeah, I've heard this,
Yeah. It's I mean, Gann talked about it. They're called decade cycles, and years ending in 3, 4, 5, and typically 6 are up years. And so you can see that throughout history, even basically through World War II, 1942, 43, 44, 45, 46 are good years, you know, the 7th year sometimes. So these things, they just, they happen time and time again. It doesn't have to be exact, but if you've got an understanding of that, basically from that end point in the late half of the year ending in 2 until the end of the year ending in 5, so in our case now, 2025, the markets are going to be up just based on history, looking at data, and just looking at probabilities. Not saying some, you know, esoteric craziness of cycles and whatnot. It's just the data itself.
Can you just zoom in on those two bear markets, the 2000 bear market and the 2008 bear market? I just want to zoom in because I have a question I want to ask you on this. There are some analysts like Robert Prechter who believe, now they're saying, and I respect them, but he believes that the current rally we're seeing in the stock market is more similar to those bear market rallies you saw, like the one in the dot-com crash from 2000, 2003. He's saying it could be one of those bear market rallies, which then collapsed into lower levels, or the bear market rallies in the year 2008. So my question is, what would you say to that? Why can this current rally not be one of those? Now, let me just say from the outset that I actually agree with you. I don't think we're in a bear market rally. I think we're in a bull market rally. But what would you say to people who maybe have a different point of view, saying this is a bear market rally?
Is he calling this, so where my cursor is, 2002 to the peak here in 2007? Is he calling that
He's
a bear
calling
market?
those minor pullbacks, those minor rallies in between. Do you see that downtrend? Do you see that downtrend? Yeah, like one of those. Yes, exactly.
Oh, no, it's impossible. It's completely impossible for it to be one of those. In terms of the news, it sounds like it could be the same thing. Logically speaking, it sounds like it should be the same thing. Fundamentally, it sounds like it should be the same thing. Technically, when you look at a chart, it's two completely different charts. Lower highs, lower lows in 2002 and 2008. None of those monthly swing tops were broken. Yet in 2023, we've broken monthly swing tops. So they're two completely different beasts. One is telling you it's a bull market, the other's told you it's a bear market. There was just no push through to the upside, whereas now we've seen a lot of momentum to the upside, breaking key levels. It never broke key levels in those two previous bear markets.
Thanks, Jason. Are there other charts you want to show?
So that's a look at the S&P and where we currently sit when it comes to this current cycle. And maybe we do turn out to be something like 2003 into 2007. I honestly think this time around we are going to break the 2022 top further than what happened last time. But we are in store for a very, very big collapse after this peak. And we're looking at the peak somewhere around 2026. I think I've heard you say something similar before, Alessio.
2026, 2025, 2026 potentially.
Yeah, we're looking at something like that. And I think we're going to break it by some measure now. We're going to break this top here at 2022, just with how fast we've been moving out of this low. That leads us to the biggest cycle in the world, the real estate and economic cycle. This is a complete video on its own, but just to give you some context here, we're coming out of this mid-cycle slowdown. This mid-cycle was 2020, sorry. Yep. And we're leading up into this final stage, which gets more volatile. Prices tend to shoot up much quicker, and then we have pretty significant pullbacks, and then we get into this winner's curse stage at the end of the cycle, typically like an altcoin market where retail gets in and they just expect to be always making profits. And then that leads to this very, very big collapse where we will get a very decent recession or potentially depression. Which lasts longer than what we saw in the mid-cycle. We saw a very brief, shallow recession in 2020, and technically we saw something in 2022. The midpoint was 2020, and we're going to have this next 7 years, somewhere into that 2026. The market, all of the indicators are leading towards this across the economy, the banking sector, the stock markets, and most importantly, the land market, the real estate market. And this is going to catch a lot of people out before this major collapse that could last into 2030, from about 2026 into about 2030.
So it seems from that last chart you showed that we are potentially at the start of a much bigger, longer-term bull market, could last a few years. So you're thinking could last until 2025, 2026, potentially?
Somewhere around there. And it's going to be slightly different across, say, the stock markets, the real estate, and those sort of things. They're all going to peak at similar-ish times, but across several months. But for the average person, they're expecting it to be everything on the same day. It's not going to play out like that. That's too simple. But it's got a few more years. But when we look at where it started from, 2009, 2011 for this cycle, we've been up for a long time. We've just got this last little section to go. Everyone jumps in because we got over all the problems of 2022 and 2020 and all of the problems. Everyone thinks there's nothing left to crash us. And that's what, the mindset, you went through a lot of that. You went through a lot of that with your, and that's what leads to it.
Thank you very much, Jason. Guys, please do go ahead and check out Jason Pizzino's YouTube channel. Again, I'll put the link for you guys in the description. You can also just go to YouTube and just type in Jason Pizzino and the YouTube channel will come up, and check out all his videos. And please subscribe to his videos and to his channel as well. Tell us a little bit about your channel.
Yeah, so on my channel, I look a lot at macro cycles. I cover the stock market, real estate, Bitcoin, because it all plays in together. But if we can understand the real estate and economic cycle, then that helps us identify where these lows are coming in, where these tops are coming in, and we can basically put it all together.
Thanks very much, Jason. Really appreciate it. And I really enjoyed this discussion with you about the stock market and also on Bitcoin as well.